What is a loan in the USA? Have you ever wondered how people in the USA buy a house, a car, or pay for college when they don't have all the money up front? The answer is often a loan. So, what exactly is a loan? Main explanation. A loan is money that you borrow from a lender, such as a bank, credit union, or financial company. You receive the money today and you agree to pay it back over time, usually with an additional cost called interest. For example, let's say you borrow $10,000 from a bank. The bank may give you several years to repay the money, but you usually won't pay back only $10,000. You'll also pay interest. So if your total repayment is $12,000, the extra $2,000 is the cost of borrowing the money. How does a loan work? There are usually a few important things to understand. First, principal. This is the amount you originally borrow. Second, interest rate. This determines how much you pay for borrowing the money. Third, loan term. This is how long you have to repay the loan. And fourth, monthly payment. This is the amount you typically pay each month. Common types of loans in the USA. There are several common types of loans. A mortgage is used to buy a home. An auto loan is used to purchase a car. A student loan helps pay for education. And a personal loan can be used for various personal expenses depending on the lender's terms. There are also business loans, home equity loans, and other specialized types of financing. Credit score connection. In the USA, your credit history and credit score can be very important when applying for a loan. Lenders may look at your credit history, income, existing debts, and other information to decide whether to approve your application and what interest rate to offer. Generally, stronger credit can help you qualify for better borrowing terms, but approval and rates depend on the lender and your overall financial situation. Important warning. Remember, a loan is not free money. Before taking a loan, you should understand the interest rate, fees, monthly payment, repayment period, and the total amount you will pay. A loan can be a useful financial tool, but borrowing more than you can comfortably repay can create financial problems. So, in simple words, a loan is money you borrow today and agree to repay over time, usually with interest. If you understand how loans work, you can make smarter financial decisions. Thanks for watching.